Everyone is celebrating because mortgage rates are finally dropping. But here's the truth. That might not mean homes are suddenly affordable again. Yep, even with lower rates, you could still end up paying more for the same house. And today, I'm going to show you why in plain English so you don't fall into the trap. When you hear rates drop, it's easy to think, great, now I can finally buy my house. But rates are only one piece of a big puzzle. Your payment depends on your credit score, debt to income, property taxes, insurance, and even how competitive your local market is. So before you jump back into house hunting, let's look at what's really going on behind the scenes. I'm Angelica Obregon with Key Mortgages, your go-to loan officer for home buyers, investors, and families ready to make a smart money move. Okay, so what's really happening with rates? So yes, rates have dipped slightly, and that's exciting. After almost 2 years of higher rates, we're seeing small improvements. But here's what most people miss. Those numbers you see online are averages. Think of it like the weather forecast. It might say 75 and sunny, but that doesn't mean your backyard looks the same. Your rate depends on your credit, your loan type, FHA, VA, conventional, and your down payment. Two people can apply for a mortgage on the same day and get completely different results. So don't assume a lower headline rate always means lower payments. Let's say your interest rate drops from 7% to 6.5%. It sounds great, right? But what if home prices in your area jumped 5% during the same time? That 0.5% rate savings just disappeared. It's like getting a coupon, but the store quietly raised the price before you checked out, which we know it happens all the time. And we can't forget about property taxes, insurance, or HOA fees. They've all increased in many areas. So even though your rate looks prettier on paper, your overall monthly payment might still be higher. That's why I always tell my clients, don't chase the lowest rate, chase the best plan. So if you're learning something new so far, hit that like button, subscribe, and drop a comment below. It helps me reach more buyers and agents who need this information. Here's how smart buyers and investors are moving right now. They're getting pre-approved early. That way, when the right home hits the market, they're ready to make an offer before everyone else. They're using rate locks or float down options, which protects you if rates raise, but still lets you take advantage if they drop before closing. And they're negotiating seller credits to cover closing costs or buy down their rate. Basically, getting help from the seller to make the deal smoother. And remember, you can marry the house and date the rate. You can always refinance later if rates do drop more, but you can go back and buy the same home for less once prices raise again. If you found this helpful, hit like, subscribe, and drop a comment. Will you buy now or wait for rates to drop more? And don't forget, you can book your free strategy call with me through the link below or visit mykeymortgages.com. I have also started a newsletter that's going to go out monthly. So if you guys are interested on getting that, it will be good information about the market updates. Just go ahead and drop your information, your phone number, or your email, or DM me. That's your sip of wisdom from the Mortgage Cafe with Angelica. See you in the next video where I'll share another insider mortgage tip to save you time, money, and stress.